Hi guys, welcome back to our very popular podcast here at Trading College. We're going to be talking US share trading. I'm joined by Graeme, one of our, mate of mine really, that's trading US markets, and we're just going to talk trading US markets, US stocks really. How you doing, mate? Okay?
Yeah, all good. Yourself?
Yep, really, really good. I noticed that golf, I'm not talking about the game golf yet, but the stock golf is doing really,
Yeah.
really well. Tell us a little bit about that stock.
Yeah. So I go through the process sort of twice a week. I usually try and check my stocks, and I'll use the pro trading system and the screeners that we have here to try and ascertain which stocks are on the move. And of course, the one with the ticker code golf caught my attention. It was actually, I think at the time, it was like the 16th fastest growing company in the States. And I thought, oh, what's that? So I looked into what it was, and it turned out it was actually one of the golf manufacturing companies that had had a major investment about 5-6 years ago. So it was all lining up brilliantly on the charts, and I went. So yeah, I was. I could probably show you actually on my screen here if you like.
Yeah.
Yeah,
I
I'll
mean,
show you.
It's up. Literally, golf share. It's up over 1,000%.
Yeah,
It's
huge.
flying. Absolutely
Absolutely
flying.
flying. I mean, it just,
Absolutely
yeah.
flying.
I think I got in back about here somewhere when the storyteller popped and it was all above the EMAs, and so it went on and on. It was incredible, incredible run, going from strength to strength. So yeah, that was fun being a golf company, and certainly being in a US stock as well, because I tend to prefer them because the market cap's so much bigger, and that's why I tend to gravitate to them, and they're a bit more stable.
Yeah.
So
Okay.
yeah,
Let's just dive into sort of like the difference between US shares. I think most people would understand that the volatility when we get into a trade, of course, or an investment, we want it to move. Okay, we
yeah,
want the market, the price to move. And if it doesn't move, then we're going to get frustrated,
absolutely,
bored, and
yeah,
then we're going to dump the share, and then we're going to move on to something else. It's going to be a waste of time. The
yeah,
US markets, guys, they move. Okay, and
yeah,
the US stocks, individual stocks, Teslas, Apples, but there's also these small caps. We'll talk about small caps in a second, but
mm,
there's these. This is the reason we love trading US shares. Trading the FTSE 100 shares, okay, they move a bit, but outside FTSE 100, all right, it's not that much of a move on some. You've got to load the boat with position sizes to get real significant returns. I mean, you could try. One of my mentorship students, Rachel, she's trading 25p and 50p a point in a spread betting account, and she made a couple of grand last month trading just US shares.
yeah,
I mean, that's
brilliant.
great, isn't it?
Yeah,
So
it's
it
fantastic.
moves.
Yep, absolutely. Yeah, I mean the day trading, I tend to swing trade these more so, which is obviously longer term. So because I work and I've got a job, but yeah, I'm sure you can fill us in more so on the day trading side of things. I'm sure.
Well, let's dive into your portfolio and your swing trading. I mean, it's been on a cracking bull market in the US.
Yeah,
As we're doing this podcast, the Nasdaq is down. Well, the
yeah,
Dow's down another 400 points. It's come right off the highs.
yeah,
Portfolios might have been a little bit hit.
yeah,
If they didn't know that this high was coming,
yeah.
then a lot of investors might be being caught by surprise. And the tariffs that Trump's been talking about in the US has put a bit of a wake up call to the US markets and the FTSE. So, how's
Absolutely.
your portfolio doing, mate?
Yeah, well, thankfully, because I've got the system, we've got one of the indicators here, the two-wave system, and we've talked about it for long enough. You and I both, for months and months, we've been saying that the market's hugely overbought and the bubble, had to come back at some point. So I tend to use the combination of the monthly time frame and the daily time frame. And then what happens with the daily, of course, is when the monthly is telling you that it's overbought, the daily will start to give you those initial signals. So we started to see red pro trading system flags on the daily time frame. So that was the initial sort of indicator to get out of a lot of the trades, because I'd had a good run and we'd made a lot of money on them. So thankfully the system will help you get in and make money, but thankfully when times like this come, when there's a pullback on the horizon, it also indicates to you to get out. So you get the best of both worlds with the pro trading system, and it's so easy. We just buy on green, sell on red. That's
Well,
where
you
it's
must have done pretty well over the last several years. I mean,
yeah,
is it your
yeah,
ISA or your SIP or your
yeah,
pension or share
yeah.
dealing account?
Yeah, my SIP. So I had I'd worked for some big corporates, and I did the contributory pensions over the years. And then after 2008 and what happened there, they made it free to transfer the money out into a private
Brilliant.
SIP. So I'm with Hargreaves Lansdowne. So it used to be like that would have cost you like £3,000 years ago to make that, but now it's free. And so I use frequent dealing, and I'll buy and sell. Sometimes I'm in things for months on end or years even, and other times I'm more nimble and can maybe be in for 3 weeks or whatever like that. But I probably only spend maybe like, to be honest, mate, like 20, 25 minutes twice a week looking at it. So it's not a huge thing, but in terms of time, but it's obviously very beneficial. And anyone who's got a pension, I would highly advise doing this, because you can make so much, and the difference in how much you can make versus sticking it in your standard portfolio that your company advisor will give you, that maybe makes 5% a year. You can maybe make 42% in a year, or 47% or more, and after COVID, I mean, I think the day that Trump launched the relief packages back, when would that be? 2021, 2020? It was in a great run ever since. It's been epic with some of the stocks like Tesla or Apple, or some of the healthcare ones as well. Have been fantastic, and a lot of the restaurant industry and hotel industries obviously had a boom back with people getting back into hotels and all that side of things. So it's been a great run. But that being said, at the same time, we've been aware that the bubble had to burst at some point, because it's just been endless. So,
those monthly charts have been so overbought. I mean, so vertical. When it goes like that, vertical 45 degrees and more, you just know it's going to come down. And every single bubble does burst. Every bubble bursts, doesn't it? And we're seeing Bitcoin and stuff bursting. I mean, okay, so we're talking about your style of trading, and just knowing you're sort of taking control of your own finances here by running your own portfolio, like you said, and not giving it to some portfolio manager that's going to sit back and
take the commission.
I had a guy come in years ago into the office here at Trading College and to run the portfolios, and I just said to him, I said, "What happens if the market turns down?" He said, "Oh no, we just sit through that." And you think, well, the percentage, the pain to sit through it, and then to wait for it to come back is painful. I think for some people,
exactly.
when you see a portfolio at this amount, and then suddenly it's dropped 10, 15% or whatever. It's horrific. It's horrific.
Yeah, I mean, that's the beauty of doing what we do. You would get the indicators. You would start to maybe half your position size if you started to get nervous. I've done that in the past, where I've maybe sold off half if it's nicely in profit. I've done that, and then monitored it more closely going forward if we think that it's maybe going to be a sizable pullback. And then, of course, that then allows you to box off a lot of the profit, and then you can ride out the storms, and come back when the crash is over, and the turn, it's going to turn back up again, because it will come back. It always does. It
just depends how long it takes.
Exactly.
It always comes back. We'll talk about brokers in a second, because you did mention Hargreaves, how to trade US shares. But there's another way of trading, and that is these small caps in the US. Okay, I've just come back from City, did a presentation on trading using our software with small cap stocks that are gapping up. When I was a young lad 20 years ago, the US market would open at 1 p.m. London time for pre-market, open at 2:30 for the cash session, all the way through to 9 p.m. Now we can trade out of hours at sort of 9 a.m. in the morning London time. I mean, I'm trading Apple this morning 9 a.m.
Yeah.
It's just so accessible now. Yeah. We can trade US shares, but we can also trade these really small cap shares that go from $2 to $5, in 15 minutes. And there are endless amounts of examples of that happening. So if somebody's got a small size trading account, they can trade these small cap shares and enjoy the ride, because they're quite volatile. That's the other extreme, Gray,
Yeah, absolutely. No, it's great if you can have your portfolio on one hand it's long term and it's your pension, and then you can dive in with these short term ones as well. It's manna from heaven. Brilliant.
So you got Hargreaves. Is that where you do your share? You invest in?
Yeah, I've had a few over the years. I think when I was in my company pensions, As I said, I've been with, I think it was an Aviva at one point, and then it was there's several Santander, and then I've moved it to the Share Centre, and then they stopped allowing it, and then I went to Hargreaves Lansdowne now. So yeah, I'll just be able to. You just order them up. I tend to, the sort of strategy I've deployed for, must be getting on 25 years now, really, has been maybe try and aim for about 13, 14 stocks at once, and I'll divide my pot by that,
Nice. That's
by the
quite a few,
14.
yeah.
And then I'll go in and monitor them. In recent years, I have had British stocks as well in there. Some of them just to split it up a little bit. I've had a few. Some I felt that I was sometimes too heavy on like the Magnificent Seven. That
Yeah.
well, you would see if you looked up some of your previous YouTube videos, you would see you've talked about them. That being said, I mean the market. I mean these Magnificent Seven prop up everything, don't they? I mean,
well, Nvidia's just getting hammered as well. I mean, US these normally made up a lot of the stocks are tech stocks or healthcare stocks, where FTSE is like banks and was it like mining and oil? I suppose is it oil, but mining companies and stuff, and heavily weighted there. It just seems so boring to trade, but I'm sure people really enjoy trading those slow stocks. That's fine. It's just US is where it's at, really.
Yeah, exactly. So that's when Hargreaves Lansdowne. You can go in, you can place your order, you can say put in your amount and just walk away. And it'll buy the share for you when the market opens, and that's away you go. You can pull out any time.
I just don't like the broker platform with Hargreaves. I just find it really old-fashioned and clunky. I really do.
I know.
Do you find
there's a few of them? It just is what it is. I just punch the numbers in, and it's certainly not the same as when we day trade and you can do it live from the chart in pro real time, and that's a much more appealing way. But no, I've just accepted that's what it is.
Let's talk a little bit about brokers and options for people trading US shares if they're based in the UK. The company, the spread betting broker that's got the most shares, as far as I know, is IG Index to trade US shares. They do have quite a few small cap, but they don't often allow us to trade it. I mean, the amount of times I've seen a trade potential in a small cap stock in the morning, and then I go to find it on IG. I find it, go to buy it, and it says, sorry, only closed orders for this stock. They obviously they don't want to be left vulnerable to a big move, I can imagine. Where, and that's so frustrating. That's so frustrating. However, in the old days, we used to have to send $25,000 over to the US to be able to open a day trading account to trade US shares. So the money's still in London, still in the UK, which is good. That's fine. But Capital Markets Elite Group are based in London, FCA regulated. All they do is US shares. You can open an account with $500. Okay, it's not going to get you very far, I'd imagine, because of fees and things. But it has them all. Right. It's not spread betting, so the profits are not tax-free. But it's another option. The platform's okay. They're getting better. So anyone listening or watching, check out Capital Markets Elite Group. I think if you want to trade US shares and all the small caps and all the shares with a small amount of money, they are the option for you.
I want to. Sounds good. I'll check them out.
Yeah, check them out, mate. It's all based in dollars. It's not a spread betting account.
Yeah.
Charting. What charting are you using?
Just pro real time. I use your indicators. I don't use anything else. Pro real time with the pro trading system. I will generally look for the price to be above your specialised EMAs. I'll look for green pro trading systems. I'll look for Storyteller, to be in its infancy ideally, on the monthly, and then my timing. What I love about pro real time is I'll quite often put an alarm in on the daily chart, or I'll look for, or I'll check for either a momentum trigger or a pro trading system. But I'll put an alarm around about a price point usually to send me an email. So if I'm on the golf course or wherever, and I get the email to say buy, I'll type in what I want, to say. So the email will come to me and say buy Caterpillar, buy Tesla, whatever.
Yeah.
So if it's made a move, then I'll look for that. And equally, sometimes I'll even put the alarm below if I want it to pull back a bit. If the long term it looks good and it has a slight pullback, then I'll maybe put an alarm in the OBS or wait for that pullback and then try and catch a bit more value there. So it's purely all trading college stuff. I wouldn't know what to do actually. I would find it hard, I must be honest, to do it without that software and those indicators. I'd find it difficult.
They're great, mate. It's simple.
Yeah,
it's simple. It's simple and powerful. Simple and powerful, and
and it's a great place to start if you want to get into trading, doing what I'm doing, because it's not time consuming, it's not overly difficult, but it can build you a great foundation for going on to be a day trader, or an AI trader as well. If you can get these fundamentals through the Pro Trader course, then you can be a proficient trader within 3 months, couldn't you?
Well, I've got students that are technical analysts, but also they want to find out about the company, want to know a little bit about the company, research, and enjoy that research, and then just apply that to the buy signal on a chart.
Yeah.
Mainly go long the markets. A lot of students now with this downturn that we're seeing in the US and in global markets, we've seen a bit of a downturn. See, most traders, I suppose, that trade US shares will go, or shares in general, will be going long the market, buying the market. Now the downturn's coming in, they might not be making as much money, because it's not as easy, because the whole market in general is turned down. So you have to have this plan. You have to have this plan to go into cash, or you can short the markets. Now, you can short indexes, you can short the FTSE by using ETFs, and the DAX by using ETFs, exchange traded funds, in your share dealing account. You can short indices, NASDAQ, DAX, all those, in your spread betting account. Just go in, pounds per point, hit the short button. You can do that. So you can hedge these positions if you want to. And it's really easy to do these days. I mean, we've moved on from the old days where you couldn't short markets. But it's you can do it. SUK2 is the FTSE one.
Right.
And I'm in a German DAX ETF, and I cannot think of the name off the top of my head at the moment. But you can hedge your positions, which is nice.
Nice one. It's amazing now, isn't it? I mean, years ago you could only ever go long, couldn't you? Now you've got all these options to go short as well. It's brilliant. It's really
a good one.
Yeah, made it all angles covered.
Good one. All right, pal. Well, let's leave it as that, and keep on trading well, and get ready for the next buying opportunity, because that should be around the corner at some point, mate.
Yeah, hopefully
we'll dive into it.
Absolutely. Nice to see you, mate. Right. Cheers.
See you, mate.
See you later. Bye.
Bye, mate.
Bye.